Welcome to a new update. Today we're talking about Bitcoin's price action as Bitcoin is swimming around 35k. It's still yearly high and still looking at continuation and potentially a bullish start of this bull cycle, in which we are going to look at new all-time highs projected in like 18 months from now. But how can you position yourself and what should you be looking at in current price action of Bitcoin? We're going to discuss that, and we're going to discuss a big event that is going to take place tomorrow, in which the significance is getting lower and lower, but it's still important to take into consideration, which is the FOMC meeting tomorrow evening, which is going to be a big indicator for the market. Before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also check out our other platforms, X and Instagram, where I'm providing more content on the markets. And additionally, this video is sponsored by Bybit, which is my go-to exchange to trade Bitcoin. I'm doing that through derivatives. If you join my affiliate, you are able to potentially win an iPhone 15 Pro, iPad Pro, and you're also able to be at one of my events next year, where we are going to have a masterclass or anything else that we're going to do. So make sure to join through Bybit, in which you can also trade derivatives in the Netherlands on that particular exchange. Now, when we're looking at the markets, on the screen you can see the probabilities for November 1st Fed meeting. The Fed is having monthly meetings in which they decide what they're going to do with the federal funds target rate, which is basically the interest rate. They have been hiking it very substantially in the past 2 years, through which we are currently at 5.25% or 525 basis points until 550 or 5.5. Now we are currently getting towards the end stage of the actual hiking policy, which means that we might still get a few, but inflation is slowing down. At least that is what the Fed is projecting, through which the entire policy is currently getting towards the end stages, which means that we're balancing out, so the projections are less bad or less pessimistic for the coming period. That's why you also see that crypto is doing really well. Stock indices have been doing really well, but because of the uncertainties in Gaza and Israel, we are currently seeing that stocks are starting to drop or at least consolidate. Future perspective on economies are usually slightly worse when it comes to wars. And we are seeing gold and Bitcoin doing really well. So I think that there is some sort of flipping taking place, or at least adjustments are taking place. And what we are looking at right now are the target rate probabilities, which is what people expect is going to happen tomorrow when we're looking at the Fed meeting. So what we're seeing here is that the current target rate is 525 to 550. The past year, we usually had between 1 to 3 hikes on the markets. So usually that had a bad impact on Bitcoin or on any of those assets, and a positive impact on the dollar, because increasing the target rate usually increases the currency or the base currency, and in this case that is the dollar. They go in tandem, and we're looking at that in the chart relatively soon. Now tomorrow the expectations are that we're not going to get a hike, and that is in line with what we have been seeing from the ECB. Last week the ECB also didn't hike anymore, so probably we're getting towards the last part of the hiking policy. So these are currently the projections, and this is also currently priced in. When we're looking at the next event in December, you see that there is still a 25% chance that we're going to have one hike, and that is also the case for January. So people are still in between when it comes to the hikes in the future. So the markets are currently pricing in a chance of one rate hike to take place either at next event or in January. And the markets are mostly pricing in that it just remains flat and might even start dropping from March to May onwards. As you can see, the projections are that we are at the end of the current policy. So if we have no rate hikes, markets are not doing much. I think the dollar's going to drop, and I think there's some way that the yields are going to drop. If out of the blue there is going to be a rate hike and the markets are not projecting it, I bet we can get a correction across the crypto markets. I bet we're going to have a gold correction too. stock indices are going to tank and the dollar and the yields are going to go up. So that is slightly what we're going to expect in the upcoming events. What do we see here? We see the price action which we have been facing on the dollar. The dollar has been seeing a pretty substantial rally, currently consolidating, retesting the 100 points. Now we are currently at 107. If the monthly closes like this, there is a very significant chance that we're going to have a reversal here or start to fall south, right? So we are consolidating above this previous high. We are consolidating at a level where we might continue to go to the upside, but also if we drop beneath 105, I think we are continuing the downwards fall. We just finished off the entire rally. More importantly are the yields. Those give an indication of the strength of the markets. And what do we see here? Both on the 2 years and on the 10-year yield, we see that we're potentially making a bearish divergence, which the last time we were making that was in the 1980s. After that, we are not seeing one, but at least we have been making a new high. Trend is up, but it also could mean that we're going to have a corrective period all the way back to potentially even 2%, which could be influencing the price action of Bitcoin. Because if the rates are going to fall, it is going to show a period of strength on other assets, because crypto and gold usually do really well when the yields are going to fall. If there is such a high level of uncertainty as we see right now, even if we have high yields, gold starts to do well because of the uncertainties that are on the global economy. So the monthly is potentially making a bearish divergence here on the monthly candle. The weekly, not much to say, might be topping out. The 2 years I've been following for a long time is also projected to make a bearish divergence here, and it's on the edge to start tipping over. So it might be this event, or it might be that Powell is going to be saying, hey, we are not going to hike anymore, and then it starts to fall off a cliff. Because after such a strong period of hikes, as you can see here too, you usually are going to get a period where it starts to drop down, because the economy needs to be stimulated at some point again, as the impact of this hiking policy is significant on the market. So what we see in the previous period with the bearish divergence too, and also with the previous ones, it drops really fast. So in 2018, November 2018, we started to fall off a cliff. Now we have made the previous high in October 2023, and we might be on the edge of having another cliff that we're going to drop from. In that aspect, if you look at historical price action, the peak high here, October, November 2018, marked the Bitcoin low. Very high chance that this period here also marked the low for Bitcoin. So when the yields are going to fall, the policy is going to end. That is the period where you want to get into crypto and commodities, because most likely the impact of this policy is going to be significant on the market. So the uncertainties start to rise, and you can make a return by having assets that keep their purchasing power, especially when you know that the big parties, BlackRock and more of those, are going to jump into the markets. Gold is currently consolidating around $2,000. Very likely that we're going to break to the upside, but still short term we might be having an impact that is negative, especially if he remains to be hawkish. But overall, this is my thesis for Bitcoin. I'll just remove it for a little bit. What are we looking at? I think that we currently are seeing strength on the markets. Perhaps we're going to have some consolidation based on what tomorrow is going to bring. Anything above 31k is basically an entry. Lower time frames is even more clear on this. But if we're going to have a strong weekly candle and have a continuation to the upside, I think 38k is one to watch. And then probably we are going to have some period of sideways action before we continue to the upside. When we're looking at the lower time frames for Bitcoin, and I'll just swap towards the one that I've been using. When we're looking at the lower time frames for Bitcoin, we can see that there is some strength, which means we are establishing a range. We have been testing the range highs for multiple times already. The moment we start to break to the upside, and I generally don't want to see it close to the FOMC meeting, because if we do have this to the FOMC meeting, most likely it's a fake out, and then we're topping out for a little while. but at least this is a strong period in which we are seeing multiple tests of the range high, which have been rejected. And I think that with the higher lows that we are making here, if Bitcoin is able to test the high again, we project towards 36.5. If we see a fake out and we start to drop south, there are two regions that I look at for potential add-ons when it comes to trades, which is the area around 32.8 to 33.1, and it's the area around 31k, which I marked as the previous high. If the markets are truly strong at this point, I don't believe that 31k is going to be the trigger, but you never know when the FOMC meeting is going to take place and when there is some serious action taking place from there. All in all, I think it's still a buy the dip season for the markets. I'll be back on Thursday with a longer update, which is including the FOMC meeting. Make sure to subscribe and I'll see you again soon.